You work for your money. You wake up, go to work, spend hours building someone else's business, and wait for the one day that makes all of it feel worth it. Payday. For a moment, it feels like the money is finally yours. But then something strange happens. Before you can enjoy it, the money starts disappearing. Rent takes a piece. The car takes another. Insurance takes another. Your phone bill, your subscriptions, your credit card payments. And suddenly, the money you worked so hard to earn is already going somewhere else. The strange part is, you may not even feel like you're spending that money. You didn't go shopping. You didn't buy anything exciting. You didn't make one huge mistake. And yet, somehow, your paycheck is gone. You look at your bank account and think, where did it all go? Welcome to Capital Science. Here, we break down the science behind money, wealth, and the financial decisions that shape your future. Today, we're looking at something almost everyone experiences, but very few people truly understand: the moment your money stops being yours. Imagine your employer tells you that you earn $5,000 a month. That number sounds good. You start thinking about what $5,000 could do for your life. But when payday arrives, the number in your bank account is much smaller. Taxes have already taken their share. Health insurance may have taken another. Retirement contributions may have taken another. So the $5,000 you earned was never really $5,000 you could spend. But psychologically, you still think, I make $5,000 a month. And that creates a problem. Because people often build their lifestyle around the money they earn, instead of the money they actually keep. Then, payday arrives. For a brief moment, your bank balance looks healthy. And then the automatic payments begin. Rent, the car payment, insurance, utilities, credit cards, subscriptions. One payment after another. You may not even remember signing up for some of them, but they remember you. Every month, the money leaves automatically. And that's what makes modern spending so powerful. You don't have to physically hand over cash anymore. You don't even have to think about the payment. A notification appears on your phone, payment successful, and it's gone. One small payment doesn't feel dangerous. That's the problem. A $10 subscription doesn't scare anyone. A $20 delivery fee doesn't feel like a financial crisis. A $50 upgrade doesn't seem like a life-changing decision. But you don't have one small expense. You have dozens of them. And together, they quietly build a life that consumes almost everything you earn. This is how people can get a raise and still feel broke. Their income goes up, but their lifestyle quietly follows it. A bigger apartment, a newer car, more expensive restaurants, more subscriptions, more convenience. The extra money arrives, and before they even have time to enjoy it, it has already been given a job. And sometimes, the money disappears in ways you barely notice. Think about the last time you spent $10. Maybe it was coffee, maybe a delivery fee, maybe something you ordered online and forgot about a week later. $10 doesn't feel important. But imagine spending that amount unnecessarily every day. By the end of a year, that's more than $3,600. And here's the uncomfortable part. Most people won't even remember what they bought. The coffee is gone. The food is gone. The small purchase is forgotten. But the money is still gone. Now imagine repeating that for 10 years. That's tens of thousands of dollars that disappeared through decisions that never felt important enough to question. This is how wealth often disappears. Not in one dramatic moment, but quietly, a little bit at a time. And companies understand this better than most people do. That's why subscriptions have become so powerful. You sign up once, and the payment continues, month after month. You might have a streaming service you barely watch, an app you haven't opened in weeks, a gym membership you haven't used in months, but the payment keeps going. And because the amount is small, you don't feel the urgency to stop it. That is the psychology of recurring payments. The money leaves automatically while your attention is somewhere else. And every month, another small piece of your future income is already promised. Then there's another trap that has changed the way people think about expensive purchases. The monthly payment. A $1,500 phone sounds expensive, but $62.50 a month? That feels manageable. A $40,000 car sounds like a major decision, but $599 a month? Now the decision feels much smaller. And this is where people often stop asking the most important question. Not, can I afford the monthly payment? But, how much will this actually cost me? Those are two completely different questions. Because you can afford a monthly payment and still be making a terrible financial decision. Once you accept the payment, it becomes part of your future. Then another payment arrives, then another. And slowly, your future paycheck starts becoming a collection of promises you made in the past. You work today to pay for decisions you made months or even years ago. And eventually, money stops feeling like freedom. It starts feeling like a chain. But sometimes, money disappears without you buying anything at all. Fees, a bank fee, a late payment fee, an overdraft fee, an ATM fee, an investment fee. Each one seems small, and that's exactly why people ignore them. Nobody wants to spend an hour fighting over a $5 fee. But when millions of people ignore small fees, those small amounts become enormous profits for someone else. The money you barely notice losing can still affect your future. Now imagine something positive happens. You get a raise. Maybe you earn an extra $500 every month. At first, you feel richer, but then your brain starts making plans. Maybe a better apartment, maybe a newer car, maybe more restaurants, maybe a few things you've been putting off. And slowly, that extra $500 disappears. Then another raise comes, and the same thing happens again. This is lifestyle inflation. Your income increases, but your financial freedom doesn't. You earn more, but you don't necessarily own more. You simply have a more expensive life. And this is one of the biggest differences between earning money and building wealth. When some people earn more, they immediately increase their spending. But people focused on building wealth often try to protect part of every increase. They don't need every extra dollar to create a better lifestyle. Some of it can become savings, some can become investments, and some can simply remain available, because financial breathing room has value. The ability to say, I don't have to spend this money, is a form of freedom. And here's the part most people don't think about. Many of your biggest financial decisions were made long before the money disappeared. When you signed the lease, when you financed the car, when you took the loan, when you accepted the subscription, when you upgraded your lifestyle. At the time, each decision may have felt completely reasonable. But decisions don't disappear just because the excitement does. The phone may no longer feel new. The vacation may already be a distant memory. The purchase may be completely forgotten. But the payment can continue. Your past decision keeps reaching into your future paycheck. And that's why someone can feel trapped even when they aren't spending recklessly today. Their past is still charging them. This is why income alone doesn't create wealth. Someone can earn a high salary and have almost nothing left at the end of the month. Another person can earn less, live below their income, and slowly build assets that grow over time. One person may look richer, but the other may have something much more valuable: control. Because real wealth isn't just about how much money enters your life. It's about how much of that money you can direct toward the future. So here's a simple exercise. Look at your last 30 days of spending. Not what you think you spent. Look at what actually happened. Look at every automatic payment, every subscription, every fee, every monthly obligation. And ask yourself one question. If I had to make this decision again today, would I still choose it? If the answer is no, remove it. If the answer is maybe, question it. And if the answer is yes, at least understand exactly what you're paying for. Because the first step toward financial freedom isn't always earning more money. Sometimes, it's simply stopping the money you already earn from disappearing without your permission. Your paycheck arrives, and before you can touch it, the world is already waiting for its share. But you still have a choice. You can continue building a life where every dollar is already promised before it arrives. or you can slowly create a life where more of your money remains under your control. Because the most important financial question isn't, how much money do I make? It's this: how much of my money do I actually control? That question can change the way you spend, the way you save, the way you invest, and eventually, the way you live. Because the goal of wealth isn't simply to look rich. It's to reach a point where your money gives you choices. Choices about your work, your time, your family, and your future. If you enjoyed this documentary, stay with Capital Science. Every day, we break down the science of money, wealth, and smarter financial decisions. Thanks for watching, and I'll see you in the next video.